Hey everyone, thanks so much for coming over here and checking us out. This morning I am with Tim Hahn with German American Bank. Introduce yourself, Tim.
Yes, Tim Hahn, German American Bank. Been with German American for about 2.5 years and been in the mortgage real estate industry for over 20.
Oh my goodness, that is a long time.
A little bit, yeah.
So I would
A
have
little
to,
bit.
yeah, I think I'd have to consider you a subject matter expert.
Maybe, yes. Getting there.
Okay, tell me what you like about your profession.
I think the most fun part of the lending side, if I've got to kind of pick a specific home buyer or situation, I love first time home buyers.
Yes.
First time home buyers are fun. Very appreciative.
Yeah.
They you kind of make them realize a dream that they didn't understand was possible.
Mm-hmm.
So getting that opportunity to take them from that initial conversation step to really the closing table.
Yes.
A lot of fun. It's a lot of fun.
Well, a fact here is that Tim was the first lender that I worked with my very first customer.
Yes.
And we'll just call him Bob because
Yes.
that is his first name,
Yes.
Bob, and we'll just keep it at that. But that was a journey, wasn't it?
It was.
Yeah.
And, I think that's part of the first-time home buyer market right now, is that homes are much more expensive.
Yes.
And they're harder to come by. And that first-time home buyer really needs to be walked through the process from beginning to end, from everything from the real estate side to the lending side and everything in between. So, yeah, it was a good journey.
It was a good journey. And specifically, there was a moment where you turned things around for me because what happened here is this was his first home ever.
Yep.
This is a retired veteran, and he'd always lived, he said, either in the barracks or somewhere, military or rented.
Correct.
And so he's now in his 60s, and suddenly he's in a point of his life where he was ready to buy something. But it was so nerve-wracking for him because he wasn't really familiar with the process.
Correct.
So we looked for almost a year together. And there was a point where I started getting a little bit frustrated and impatient. And one of the deals, what fell through, and I called Tim to let him know. And your first reaction was, wow, he must be so discouraged. And that really put things into perspective for me because it wasn't about me. It was about our client. And you helped me refocus.
Yeah.
You know what I mean? And
I've had to have that before too, because I've been told the same thing. I went, oh yeah, we get bogged down with what we do every day.
Right.
And sometimes, there's got to be a little reminder that we can't get bogged down unless we have that customer. So the customer is the center of that whole process.
Exactly.
And, but again, the first time home buyer, in a lot of ways, that it feels easier to be with them. There's just so much appreciation for them getting over a huge hurdle in their life, that it's a lot of fun to help see them through it.
I have to admit that it was very rewarding for me, to see him have that to be part of that journey for him. And so I am a firm believer in the fact that it's all about the client. And so another situation I think we got into, actually, no, it was the same transaction, but I think that we had like 4 deals.
There was, it was a few because of
circumstances.
The building itself or what repairs this and that. And it happens.
Right.
It happens.
At one point I found myself answering the listing agent's questions because Bob was the buyer, obviously. And this agent was maybe pressing me with questions that you were answering and I was answering.
Right.
Right. And so, but there was a little bit of back and forth. So I just got us all together in a group text message. And Tim was very gracious and explained the process to the listing agent. In other words, to say, we've answered your question and our client is good to go. And from there on, there were no problems. But
right.
Yeah, I really appreciated your support there.
Yeah, well, I think this is it's a line of work where we all have different experiences and have been through different things where, somebody that's got 20 plus years of experience may not have been through something specifically that somebody even with 6 months of experience. So there's a lot to be said about going into every work day with the idea of having the mindset of learning something new that day, no matter how big or small it is, but having that mindset of, I'm going to learn something new today from somebody or from something.
Exactly.
Every transaction, as I say, is like a fingerprint.
Okay.
There's no two similar transactions because you're dealing with somebody different.
Right. Somebody said that to me. No transaction is ever identical or
Correct.
the same.
Yep.
And what you just said also reminded me of a quote that I read somewhere that says something like, as long as I keep an open mind, anyone and everyone I meet can become my teacher.
Yes.
Right?
Same idea.
Yeah.
You come into your day expecting to learn something new.
Something new. Exactly. Even if it is, I will not treat people that way. Thank you for Am I right?
That might be the most important, right?
Yes. One of the things that's very important to me is to also have a wonderful relationship with the people that we're partnering up to help that client, because the goal is the same.
Yes.
So might as well partner up, right? And make the transaction as pleasant as possible, I think.
Agreed. Because when the people working for a specific customer are not on the same page or not getting along, it can be laborious. So having that relationship where honestly you can send each other a text message, give each other a phone call and kind of laugh.
Right.
That means that you're in a good position together.
Exactly.
And really in the end, the customer's in a better spot.
Exactly. I remember, and Tim didn't know me I was brand new, so not too long ago. So I'm still fairly new in some ways.
That's all. Hey, it's all good.
But it's okay. But I remember wanting an update from Tim, and so I would just text him with "sup."
Yeah. Right. And I got,
and he's like, "Sup," and then he would give me an update and everything. But there's no need to be like, iron fisting and
or it doesn't have to be overly formal.
Right. Yeah.
I think text messaging has done that to us as a society, but even from business to business standpoint, hey, what's up?
Yeah.
is more than appropriate to find out just where things are. And then, of course, when you're working with similar people over and over again, and you may have 2, 3, 4 transactions going at the same time, then of course you're talking every day anyway.
Yeah.
And that's fun, when you can interject certain things, and then, things begin there's a growth piece to that.
Sure.
But again, I think customers see that positivity.
I agree.
When you have those good relationships.
I think it makes it transfers through. You ready for some challenging questions?
Yes, let's go.
All right. What are let's focus on the client. What are your pet peeves, if any, when it comes to a client?
Really timing of information.
Okay.
I can only produce something as quickly as the customer is able to get requested information.
That makes sense.
So there's a standard list of information that I will send out to a customer upon application.
Okay.
But those where directions are not followed to a T will be delayed.
Okay. That's good to know.
Those that may actually find themselves ahead of schedule.
I see.
So,
timeliness providing the information that you need in order to help them is essential.
Absolutely. Because, if you're looking at a customer with a certain income factor that requires A, B, C, and D, I'm asking for A, B, C, and D to make it as the transition as easy as possible. If you only give me A and C, and B and D are still missing, and I've asked for them again, we're kind of slogging through, and we're not going to get over that next hump.
Okay.
Every customer is going to be different. Some are going to be very, very simple. Some it might just be one pay stub, one W-2, two bank statements, and we're done.
Wow.
Others, it might be tax returns, W-2s, pay stubs from this year, last year, and the year before. It depends on how we have to formulate the loan, how we have to calculate that income to get you approved. These days, with higher rates, higher sale prices, we're probably looking more at the more detailed information than what we have in the past. If we got account overtime or bonus income or commissions or anything like that, that's a 2-year requirement. So we're digging back into pay stubs by a couple of years.
Okay.
If it's somebody just on base income, then it's sometimes just the most recent pay stub and that's it.
Oh.
So
it all depends on
it really depends, but I'm asking for things for a reason.
Right. Okay. That makes perfect sense to me. Question about that though. I know I've heard some complaints of, I've already provided this to my lender and they're asking for it again. And I remember one lender saying that as time goes by, you ask for maybe a bank statement, but because it's more recent. Tell me about that a little bit.
Absolutely. So if documentation is provided at time X, but that was just pre-approval, and now we're 3 months down the road, we may need that pay stub, that bank statement updated. Certain documentation has an expiration date on it.
Oh, okay.
Usually at 120 days from date of that document to current.
Okay.
But there could be other things that are necessary from an updated document that an older document does not show, even though that older document may not be expired.
Got it. Okay. So therefore, let's say, for example, in Bob's case, it took us almost a year to find the right house. At that point, you were asking for certain documentation because it had been way beyond the
correct. Yes.
120 days or whatnot.
Right. Absolutely.
Okay.
And usually those are going to be bank statements and pay statements, pay stubs.
Okay.
Now, of course, as you get into a new year, we just hit February 1st a few weeks ago.
Right.
So for the last year, we've been asking for 2022 and 2023 tax information or W-2s. As of February 1st, everybody should have their 2024. So we got to request that.
Got it.
We can't request tax returns for 2024 until the due date of April 15th. After that due date, then they become an intrinsic part.
Okay. So it's best to not wait too long to file those taxes.
Yeah. Well, yeah. There's extensions and stuff like that. That's okay too. I mean, we can't force a filing because you're applying for a mortgage.
Okay.
But if the date has hit that it's required, then we must get that from you.
Okay. Let me ask you this. I know that sometimes when somebody comes in and puts in an application, the answer is no or not yet, right? So you see the person's status and where they are. Are you able to provide them with any recommendations for them to be able to get to that point?
Absolutely. 3 main pieces that we look at from a pre-approval standpoint is income or debt ratio. Okay. So how does the total gross income affected by what payments are being made in the new mortgage payment?
I see.
Credit scoring, of course, is a big part. And that feeds into the debt ratio a little bit too, because of what accounts are reporting.
Okay.
And then your assets. So what funds are you working with? Whether they're liquid, whether they're from a retirement account, whether it's a family gift, whether it's from the sale of a home. What are you working with in terms of dollars and cents that you can pay that would be available to you upon closing? So sometimes we've got 2 of those and the third is short or lacking. I had a customer last week where everything looked really, really, really good.
Yeah.
And I just said, when you find a house, let me know. This is your pre-approval amount, but you can go well above that if you want.
Okay.
Do know that it's going to cost you a lot more.
Right.
But you're good. But they also did a great job in providing to me the information that I requested before we met.
Okay.
So we met on Thursday. They had a contract by Monday. So that's one of those things where we say, if you provide your information timely,
yes,
we can get you taken care of timely and moved on timely. So they're going to be closing beginning of March.
That's fantastic.
It can happen very, very quickly.
Now, I know that we're having a tough time with the market. I would say it's a bit tough for both buyers and sellers.
Sure.
Right? The sellers are not selling their houses as fast as they want for the prices that they want. And buyers are sometimes either priced out of the market and or the interest rates are scaring them.
Yes.
Right. Tell me a little bit more about the condition of the interest rates.
It's the very difficult part of our market today is, and it's different than what we've seen for decades, is that, 2021, we were at record lows. By 2020, late 22 and early 23, rates had gone up 2.5, almost 3 times where they were.
Yeah.
But because of inventory, prices really didn't come down when rates went up, or prices didn't really stand still. So you still had some people that needed to move, and those people that needed to move were the ones putting their homes on the market and the ones buying them.
I see.
But when you have a small market of buyers and a small market of sellers, you've still got somewhat a demand feature to it where prices are going to stay.
Interesting.
So what I've seen comparatively is that 3 years ago, debt ratio wasn't really a concern.
Oh, really?
An applicant would put in an application or a pre-approval, and I'd say, yeah, you can, at 3%, you're pre-approved up to 400,000. And they're looking at something where they didn't want to spend much more than 250 to 300.
I see.
And their debt ratio was in the 30s. Now we're seeing similar buyer, a sale price that's $100,000 higher with a rate that creates a monthly payment that's about $200 higher per 100,000 borrowed. And most households have accumulated more debt in the last 3 years. So you got all that stuff mixed together. And now that person that was a very nice, clean and tidy debt ratio of 35% is now at 49%. And I tell them, you cannot go over this dollar amount. If you do, you run the risk of losing the home.
Wow. Okay. Interesting. And
that folds back into timeliness of documentation.
Sure. Okay.
If I have all the documentation correct, then I can tell you specifically, hey, we can get up to this number without issue. Without that full piece of documentation, I may be able to give a range, but you could run the risk of losing something.
Interesting. Yeah. And a couple $100 a month can make a huge difference. That could be your groceries, especially now with inflation as high as it is.
Yes.
That could be groceries for a couple of weeks.
Correct.
What I mean? Okay.
Correct.
So let's say someone is looking to start even thinking about buying their first home at this point or buying their next home. What are some tips that you can give them today for them to start doing today so that they can be ready maybe 3 or 6 months from now?
Sure. So we could start with savings. If you have a savings account, if you've done something to have part of your paycheck deposited to a savings account, or you have an auto draft that goes once a week from your checking to your savings, however that's done, of course, try to get some cash saved. You will need at least something for some of these out-of-pocket expenses, like your inspections and things that the real estate agents recommend for you. There are down payments and closing costs. There are also opportunities for down payment and closing costs to be covered for you as a buyer. So it's not an absolute necessity. From a credit standpoint, keep your revolving debts as low as you possibly can, because that helps your credit scores increase the fastest and most immediately. So the higher your credit card debt in comparison to your credit limit, the worse your scores will be.
Got it.
it's a very quick fix. You
Right.
can, if you've got a $4,000 balance on a $5,000 credit card, try to get that down below 2,500. You'll
Mhm.
probably you could see your scores go up 20 points,
Interesting.
25 points,
Really?
as long as there's not other things on that credit report.
Got it. Okay.
I've seen a $200 medical collection
Mm-hmm.
take 90 to 100 points off of somebody's score because everything else is perfect.
Oh my
An
goodness.
otherwise 780 borrower is at 690 because of a $200 medical collection.
That's
they pay that.
crazy.
A couple of weeks later, their score bounces right back up into the upper 700s.
And it can restore that quickly.
Oh yeah, within a couple of weeks, once it's re-reported by the credit by the collection agency.
Is it true that sometimes it is not worth paying certain debt?
Well, I mean, I would say that there's certain debt that what economists will say there's good debt and there's bad debt.
Uh-huh.
The good debts typically are looked at as mortgages, student loans,
Okay.
and auto loans because they're just a
necessity,
a necessary requirement for purchasing something that's a big ticket item.
Okay.
Education, auto, home. Ones that are considered bad debt are your revolving accounts. So your credit cards, your store credit, things like that. Paying your revolving debts down first before the big debts is most important because the interest rates are much higher and it affects your credit more.
Okay. That's almost what Dave Ramsey says a little bit,
Correct.
right? Like, well, anyway.
That is true.
Yeah.
Yes.
Yeah.
And if those aren't of issue, those types of revolving debts, then yes, paying down a mortgage faster or paying down an auto loan faster can save you some money in the long run. It's just not going to be an immediate savings.
Right.
You're going to see something that can help you 5 years down the road. And surely it's very, very helpful.
Right.
But you don't want to do that while accumulating revolving debts.
Okay. I gotcha.
Kind of shoot yourself in the foot.
Another thing too that I remember being told is don't go and do something impulsive, such as buy a new motorcycle or when you're in the middle of trying to get pre-approved and or you're already in a transaction, don't go and buy a boat or suddenly just get married. That can affect the
absolutely.
process, correct?
Yeah, absolutely. Okay. So, I mean, there's from a marriage standpoint, there's legal documentation that's required as part of the transaction. So if you're married, you need to stay married until that transaction is complete. If you are due to get married, then you're going to want to figure out the timing of that because of the way that your documentation is going to be recorded with the county. Are you going to be recorded as an unmarried couple or you could be recorded as a married couple? So you may want to get married before the transaction finalizes. So that way you can be recorded as a married couple. From there, it's lost my train of thought.
That's okay.
So
I did have a question actually. I mean, I have several, but what are some programs that you have currently to help first-time home buyers?
Yeah. I mean, again, that's really been a big part of the market the last couple of years. Okay. And we've got a lot of opportunities. Of course, typically a lot of first-time home buyers will use a USDA or an FHA home loan.
Okay.
No to low down payments and typically what would be considered below market interest rates. So rates are lower than conventional.
Okay.
From there, we also have some down payment assistance options through Kentucky Housing Corporation.
Okay.
That can give you up to $10,000 towards down payment and or closing costs.
Okay.
And it's usable through FHA, VA, USDA, and even conventional financing. We do have a grant option as well. That's an internal loan type. It's a fixed 30-year mortgage without mortgage insurance. Oh. And gives you a $2,500 grant that could be used towards down payment or closing costs as well.
Okay.
And then through First Home Loan Bank of Indianapolis, every year we do have a $20,000 grant opportunity for first-time home buyers. It is a very tight window to fit into.
Okay.
Household income-wise, but I was able to close 2 of those last year, and it was really, really advantageous to those buyers.
And is there a limit to that? Meaning, is there's only so much money that can
only so much money
be allocated?
Something like it's anywhere between $5 and $10 million.
Wow.
That's offered, and it's $20,000 per.
Okay.
So five customers, that's $100,000 right there. So it goes pretty quickly. Mm-hmm. But again, it's a very small box to fit into from the standpoint of qualification. Okay. So there's income caps that
fair enough.
We have to be very careful within the county and everything else. So that's actually due to be rolled out by the end of this month. I would say we will probably have those funds available to us in April.
That's fantastic.
I think that's just my guess. More to come.
Okay. The thing is, the point I think here is that there are options out there.
Yes.
For people, and you're not alone. And to me, I think it's important for people to find out where they are now.
Sure.
So they can start getting ready for where they want to be tomorrow, right?
I had 4 different closings. It was 4 of them in December.
Okay.
They were all home buyers, first-time home buyers that did not think they could do it.
Oh.
And we talked about it.
Okay.
We looked at there was some work we had to do with some of them. Others were what I would call over prepared.
Okay.
But still didn't think they could do it.
Wow.
Others were somewhat underprepared.
Okay.
And thought it was going to be a couple of years.
Okay, but it was sooner than that.
But we were able to get all 4 of them. All conversations started between September and October, and they were all under contract in November and closed in December.
Isn't that wonderful?
You've got, if there's any inkling that you want to possibly buy, maybe not tomorrow, but in the next 6, 9, 12, 18 months.
Yes.
Look at it now.
Because time keeps marching on and you'll get there eventually. So you might as well know now, right?
Well, you've got that. And this isn't a sales ploy by any means,
right? In
that prices are continuing to increase. Yes. As rates start to gently fall, and I say gently because we can't have a really big expectation of a huge drop. I just don't think that's possible. But as they continue to slowly recede, we're going to see sale prices continue to increase.
Oh boy.
We've got a shortage,
right?
Got a housing shortage.
Okay. Well, let me ask you this, Tim, if somebody wanted to reach out to you, where could they contact you?
Sure. My cell phone is always on and available. So by call or text, area code 410-440-3948. You can email me at tim.hahn@germanamerican.com.
Awesome. And as you know, we'll put the information down below so that you can check that out. And, I make these videos, Tim, to not as necessarily a sales point, right?
Sure.
A ploy, like you said, but mostly to get the information out there.
Yeah.
And so I think that the more information we have, the more opportunities we can acquire and then fulfill those dreams of being a first-time homeowner or, investing in additional real estate, if that's the case.
Absolutely.
Yeah. So if you are a first-time homeowner and you're thinking about it, don't despair. Obviously, there's a lot of opportunity out there. It's a lot of chances. And it's wonderful to get in touch with a subject matter expert who can walk you through this process. I know that when you and I worked with Bob, I had to sit down and actually draw the process with him so that he could visualize it, and it helped me as well. So sometimes, if we have to get down to the mere basics, we can do that. I'm thinking, Tim, that we can do this again and speak specifically of the various loans that are out there. You mentioned USDA loans, FHA conventional and all that, VA loans. And I want to dig more into them specifically so that the consumers out there can know a little bit more about them.
Absolutely.
Yeah?
Absolutely.
All right. Well, Tim, thank you so much for coming over. It's been good to see you.
You as well.
Thank you for making the time.
You bet. Thank you.
All right. Talk to you guys later.
Bye-bye.